Have you ever wondered why you analyze correctly, yet your account is still negative? Why there are trades where you see the market move in the right direction at first, but in the end, you still can't keep much profit? Why there are times you clearly know you're wrong, yet your hand still can't press the cut loss button? It's not because you lack knowledge. It's not because you haven't learned enough indicators. It's also not because the market hates you. It's because inside your head, every time you place a trade, there are always two invisible characters controlling every decision: hope and fear. These two emotions are not loud. They don't shout inside your head. They only whisper, very softly, but strongly enough to bend the entire trading plan you once wrote in your calmest state. If you don't clearly understand and put these two psychological forces in the right place, they will lead you down a path very familiar to most traders out there, holding, losing trades, averaging losses, losing control, and eventually blowing the account. Trading at a certain stage is no longer a game of candlestick patterns or moving averages. It becomes a game of psychological reflexes. And the scariest part is, these two reflexes are almost human instincts. Look at a very familiar situation. You enter a trade at a beautiful level. The setup is clear. Risk management is proper. Price moves in your direction. Your account starts turning green. Profit ticks up in small numbers. And right at that moment, a very uncomfortable feeling appears. Not joy, not confidence, but fear. You start thinking, what if price reverses? What if it comes back to entry? If I don't close now and it turns, I'll regret it. Your heart beats a little faster. Your eyes glue themselves to every small candle. Every tiny pullback makes you flinch. You are no longer looking at the market through structure. You are looking through the fear of losing the profit you currently have. And then, you close the trade. Not because of a reversal signal, not because the target RR was reached, but simply because you couldn't stand the feeling of being in profit, but not sure you can keep it. That is fear while in profit. It makes traders unable to hold winners, unable to let trades run to their potential, unable to let big profits compensate for many small losses later. You didn't lose because the market reversed. You lost because you cut the wings off your winning trade. The irony is, this fear is not unreasonable, because the market has reversed many times before. You've seen plus $50 go back to break even, plus $100 turn into minus $20. Those memories are deeply imprinted in your brain. The brain doesn't remember market structure. The brain remembers the pain of watching profit evaporate. So every time you are in profit, the brain activates protection mode. It whispers, close it. Secure something. Don't let it disappear again. The problem is, the market pays those who are patient in the right way. It does not pay those who only know how to protect their emotions. Now switch to the opposite situation. You enter a trade a bit rushed. The entry isn't that good. Maybe because of FOMO. Maybe because you wanted to catch the move. Price goes against you. Slightly negative, then deeper. At this moment, instead of fear, another feeling appears. Hope. It's probably just a pullback. I can cut at break even when it comes back. The market can't go in one direction forever. You start looking for reasons to hold the trade. You zoom out to a higher time frame to see there's still support. You draw new trend lines to reassure yourself. You are no longer analyzing to make a decision. You are analyzing to feed hope. That is hope while in a losing trade. And it is even more dangerous than fear. Hope gives you the feeling that you still have a chance. Hope makes you postpone the pain of admitting you are wrong. Hope gives you an imaginary escape. As long as it comes back to break even, the problem is, the market has no obligation to bring you back to shore. But ironically, sometimes it actually does. There are times you hold a deep loss and then price turns. You escape at break even with a small profit. That time, you breathe a sigh of relief. You think you were good at enduring. You think you were patient. In reality, the market just rewarded a wrong behavior, and the brain remembers that very clearly. It learns. Sometimes holding losses works. So next time, you hold even better. At minus 2R, you still hold. At minus 3R, you still nurture hope, until one day you meet a move that never turns back, and the account has no chance to come back either. Do you see the contradiction? When in profit, you are afraid. When in loss, you hope. While it should be the opposite. Profit is when you have the right to hope the market goes further. Loss is when you should know how to fear in order to protect yourself. But human instinct operates completely opposite to trading logic. That's why trading becomes a war against your own primitive psychological wiring. This is why these two emotions are harder to change than any technical analysis tool. You can learn price patterns in a few months. You can understand market structure after a few hundred hours of charts. But to fix the reflex of fear when in profit, hope when in loss, can take years. Because it's not just knowledge, it's reprogramming emotional reflexes every time real money is moving on the screen. The market doesn't kill you with one big hit. It wears you down with hundreds of small decisions distorted by misplaced fear and hope. You don't blow up because of one trade. You blow up because of a repeating behavior pattern, cutting profits early, holding losses deep, cutting profits early, holding losses deep, until just one oversized losing hold is enough to end everything. And the most bitter part is, the market is still there. Charts are still moving. Opportunities are still present. It's just that you no longer have enough capital and no longer have the psychological strength to stay. If trading is a war, then this is not a war between you and the market. This is a war between you and the two emotions living in your head. Hope in the wrong place. Fear at the wrong time. To survive long-term in trading, you cannot eliminate hope and fear. You can only train them to stand in the right positions. The problem is not, don't be afraid and not don't hope. The problem is, what to fear and what to hope for. Start from the moment you enter a trade. Before entering, everything is rational. You analyze structure. You have scenarios. You know where you are wrong. You know what to expect if you are right. At this moment, you are like a strategist. But right after you press buy or sell, you become a different person. Now, money starts moving. Emotions step in. And the two old characters return to the stage, hope and fear. The first thing you must learn is fear before entering a trade, not after you are already losing. Fear here does not mean shaking and being unable to trade. It is disciplined fear. Fear of using the wrong position size. Fear of entering without a proper setup. Fear of breaking system rules. This is healthy fear. It keeps you from exceeding allowed risk. It forces you to place a stop loss. It reminds you, I can be wrong. A mature trader is not afraid of the market. They are afraid of trading without discipline. But ironically, this correctly placed fear is often very weak. New traders fear missing opportunities more than losing money. Fear missing the move more than breaking their system. So they enter trades very bravely, but are not brave enough to admit they are wrong later. Now comes the stage when the trade is in profit. This is when you must learn disciplined hope. Hope here is not baseless dreaming. It is allowing your winning trade room to breathe. Hope that your system has an edge. Hope that correct trades will compensate for many wrong ones. Hope that market structure is still valid until it is truly broken. This kind of hope helps you hold trades according to plan. Helps you not panic over small pullbacks. Helps you let large profits form the only thing that can sustain a trader long term. You must get used to the feeling of being in profit but not closing yet. That feeling is very uncomfortable. It's like holding something that could fall out of your hands at any moment. But the ability to endure that discomfort is the line between a forever break-even trader and a truly profitable trader. On the other hand, when the trade goes against you and hits stop loss, this is when fear must appear clearly. Fear of losing more than planned. Fear of the account being worn down by an uncontrolled trade. Fear of a losing streak extended by ego, refusing to admit being wrong. This fear must be strong enough for you to cut the loss decisively. No moving the stop, no widening SL, no adding positions to average down. This is life-saving fear. It keeps you alive to trade tomorrow. But most traders do the complete opposite. They are stupidly brave when losing, and regrettably cowardly when winning. That's all the market needs to take their money. You must understand something very important. The market does not need to beat you in every trade. It only needs you to gain little when right and lose a lot when wrong. If this structure repeats long enough, the final result is always the same. Remember this carefully. The market is very good at holding profits. That is exactly when you are holding losses. And the market is very bad at holding losses, because traders always rush to take profits at the first sign of gain. You are doing the opposite of how the market operates, and you wonder why you are always on the losing side. To reverse this situation, you don't need more indicators. You need to reprogram your emotional reflexes. Instead of asking, will price reverse? When in profit, ask, has the structure been broken? Instead of telling yourself, It will probably come back when in loss. Ask, if this trade is wrong, how much more will I lose if I don't cut now? Professional trading is the process of replacing emotional questions with disciplined questions. You will never stop being afraid. You will never stop hoping. But you can choose the moment each emotion is allowed to speak. Hope when you are doing the right thing. Fear when you are going the wrong way. It sounds simple, but to do it, you must pay with many rounds of self-observation, self-correction, and controlled pain. Winning in trading is not about predicting the market correctly. It is about no longer being dragged in the wrong direction by these two primitive emotions. Once you overcome that, you not only keep your money, but also keep your calm, an asset rarer than profit. So, how do you truly retrain this reflex instead of just understanding it in theory and then falling back into old habits once money starts moving on the screen? You must turn the management of hope and fear into a chain of specific habits tied to every stage of a trade's life cycle. Not waiting for emotions to appear and then trying to handle them, but preparing your responses in advance before emotions take control. The stage before entering a trade, this is where you plant fear in the right place. Before each trade, ask yourself just one question. If this trade loses exactly at stop loss, can I completely accept that amount of money? If the answer still feels uneasy, your position size is too big. The fear here is not fear of the market. It is fear that you won't be able to handle the pressure when the trade is negative. When you reduce size to the point where a loss feels bearable, you clear the path to not clinging to blind hope later, just because you're afraid of losing money. Many people don't hold losses because they believe in their analysis. They hold losses because their position is too large. So large that cutting the loss means emotional pain they cannot bear. So, hope appears to numb that pain. The stage right after entering a trade, this is when you lock your hands. You must accept a slightly harsh truth. From the moment the trade is filled, you almost no longer have the right to think more. The plan was made beforehand. The invalidation point was defined beforehand. The profit target was estimated beforehand. Most new thoughts that arise after entering a trade are products of emotion, not logic. Your job now is only one thing. Observe whether the market violates the original scenario or not. No adding new reasons to hold. No removing old reasons to exit. You are training your brain to understand that. Emotions do not have the right to edit the plan midway. The stage when the trade is in profit, this is where you practice disciplined hope. Instead of looking at the money you're up, look at market structure. You are not holding the trade because of greed. You are holding because there is no objective reason to exit yet. Every small pullback will make your heart skip a beat. Your brain will whisper, "Close it to be safe." This is the exercise. You don't silence that fear. You see it, but you don't act on it. You tell yourself, "Thanks, brain, for reminding me to be afraid." But the plan isn't broken. I stay. Each time you do this, you are rebuilding neural pathways in your brain. You are teaching yourself that discomfort does not equal danger. Traders who last are those who can endure discomfort while being right. The stage when the trade hits stop loss, this is where you train life-saving fear. The moment price approaches SL is usually very uncomfortable. The brain starts racing. Maybe move SL a bit. Maybe add another position to average. This is when you must learn to fear the right thing. Not fear losing money on one trade, but fear the behavior of breaking discipline that opens the door to a much bigger disaster. Ask yourself, do I want small pain according to plan, or big pain from fighting the plan? Stop loss is no longer the enemy, it is a bodyguard. Each time you let SL get hit without interference, you reinforce a new identity. I am someone who cuts losses by the rules. That identity is more important than any single winning trade. The stage after closing a trade, this is where you detox leftover hope and fear. After a winning trade, don't let hope turn into the illusion that I can read the market. After a losing trade, don't let fear turn into the thought, I'm terrible. The system must be wrong. What you need to do is simply evaluate the process. Did I enter the correct setup? Was the position size correct? Did I follow the plan with discipline? If the answer is yes, then profit or loss is just a small sample in a larger probability series. When you focus on process instead of money, hope and fear gradually lose their extreme control. Gradually, you will notice a very strange change. You still have emotions. Your heart still beats faster when a trade moves strongly. You still feel regret when SL is hit and price reverses, but you no longer react impulsively like before. Between emotion and action, a small gap begins to appear. That gap is where professional traders are born. The market does not disappear. Volatility does not calm down. Risk does not shrink. Only you are different. You are no longer the person who hopes when they should fear and fears when they could hope. You begin to place the right emotion at the right time. And when you do that long enough, you will understand why the market is always there, while most traders disappear from the game without ever truly understanding what they lost to. If you want these principles to move beyond paper and truly sink into reflex, you must train your psychology like you train muscles. No one goes to the gym once and gets muscles. No one reads a few articles about discipline and suddenly stops misplaced fear and hope in trading. You need repeated exercises every day, even when no trades are running. The first exercise is observing emotions without acting. Whenever you look at the chart, many small urges will appear in your head. Price is about to run, get in. This candle looks great. If I miss it, I'll regret it. Don't rush to enter. Just sit there, watch the FOMO rise, and then fall on its own. You are teaching your brain that. Emotions can appear without needing to be satisfied immediately. This is the foundation so that later, when in profit you don't rush to close, and when in loss you don't rush to feed hope with foolish actions. The second exercise is consciously accepting small losses. When you place a stop loss and it gets hit as planned, don't rush to find a new trade to make it back. Sit for a few minutes. Feel that uncomfortable sensation in your body. This feeling is exactly what used to make you move SL, hold losses, add positions. Now, you don't run from it. You sit with it. When you get used to the feeling of losing money under control, blind hope gradually loses its place to live. The third exercise is practicing holding winning trades a little longer than your instinct. You don't need to suddenly become a master at holding huge winners. Each time a trade reaches the level where you usually close, try giving it a little extra breathing room according to plan. During that extra time, you will feel very uncomfortable. You will constantly want to press the close button. This is when you are stretching your profit tolerance threshold. Before, you could only tolerate plus 1 R before fear kicked in. Gradually, you tolerate plus 1.5 R, then plus 2 R. The ability to hold large profits does not come from greed. It comes from the ability to endure insecurity while being right. The fourth exercise is writing an emotional journal after each trading session. Not just recording how much you won, how much you lost. Write, when the trade was in profit, what was I thinking? When the trade was in loss, what did I tell myself? Were there moments I wanted to break the plan? When you review many consecutive days, you will see your own repeating patterns. You will see that you always fear in the same type of situation, always hope in the same type of circumstance. Recognizing the loop is the first step to breaking it. The fifth exercise is limiting the number of trades per day. Hope and fear grow stronger when you trade continuously. Emotions don't have time to settle before a new trade triggers them again. When you limit trades, you force yourself to be more selective. You have time for your psychology to return to a neutral state. Trading is not a rapid-fire game. It's more like sniping. Fewer shots, but psychological preparation before each trigger pull. Over time, you will realize something very important. You are no longer trying to beat the market. You are building a version of yourself that can survive in the market. Someone who knows how to fear in the right place to protect capital. Someone who knows how to hope at the right time to give profits a chance to grow. When these two emotions stand in the right positions, the chart still moves up and down as before, but you are no longer dragged up and down with every tick. And at that point, trading becomes strangely quiet. No more suffocating feeling when in profit. No more panic when taking a planned loss. Only repeated decisions, disciplined, sometimes boring. But that controlled boredom is exactly what feeds your account year after year. The market is always there. It is not in a hurry. It has no emotions. It does not hope you win or lose. Only traders burn themselves with misplaced hope and tie themselves up with fear at the wrong time. When you learn to reposition these two emotions, you don't just change your trading results. You change how you face risk, loss, and yourself. And that is the real victory in trading.